Hi friends, this is Rahul Jain, and in today's video we are going to discuss the growth and value stocks. You may have heard of growth stocks and value stocks, but if you're still not clear in terms of their characteristics, risks, potential returns, this video is for you. Firstly, what are growth stocks? So growth stocks are those stocks that are expected to grow at a high rate in the foreseeable future in a given industry or a sector. If you note few underlined words here, 1. Expected to. This implies we are speaking about future growth and not the past growth. 2. Grow at a high rate. Natural question here is growth of what? And this is where most people get confused and they think here growth is growth of stock price. But here growth refers to earnings growth. And yes, if earnings of a stock grow, generally stock prices are likely to follow. You may have a natural question here. How do we decide if a stock is expected to grow at a high rate or not? Well, no one can accurately predict the future growth rate, but investors look for earning guidance given by the management of the company. One can also get an idea about the growth rate of the company from the business in which it operates. Some companies have innovative products. This gives them a competitive advantage. This in turn can result in high growth for them in the foreseeable future. And secondly, the credibility of management's guidance is also crucial because if in the past a company performed better than the management's earning guidance given, it may build confidence in management's ability. Having defined the growth stocks, here are a few key characteristics of the growth stocks. Number 1, growth stocks generally trade at a higher price than their actual worth. This is because investors queue up to buy such stocks in anticipation of strong earnings growth in future. They trade at a high price to earnings ratio. Number 2, growth stocks may show higher volatility. Number 3, the chances of generating multi-bagger returns may be relatively higher in growth stocks. Let us now move to value stocks. Value stocks are stocks that trade at relatively lower valuations. They trade at a relatively low P/E ratio or at a relatively low price-to-book value ratio. The market price of a stock is nearer to the fair or intrinsic value of a stock. There is no universally accepted model to arrive at intrinsic value of a stock. However, there are few popular models such as discounted cash flow (DCF) to arrive at the intrinsic value. Interestingly enough, two investors may use the same model (DCF) and still may arrive at different intrinsic value of stocks because the assumptions they may use could be very different. Having defined the value stocks, here are a few characteristics of value stocks. Number 1. Value stocks usually trade at a lower P/E valuations. There can be multiple reasons because of which markets have undervalued a stock. One reason can be it being a mature stock with fewer growth opportunities. Value stocks usually are from more mature industries. Number 2, generally value stocks are comparatively less volatile. Here is a summary of growth and value stocks. Feel free to pause the video and have a look. In the closing, each investor is different in terms of their returns expectation and risk appetite. So some may go for growth investing, some may go for value investing, and some may adopt a hybrid approach. What do you think your investing style is? Value, growth, or hybrid? Hope you found this video useful. I look forward to seeing you in my next video.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.